Hi, everyone. Welcome. Thank you for being here for today's webinar, Freight Invoice Accuracy, Boosting ROI with Automated Reconciliation within D365 Finance and Supply Chain. I'm Aaron Klein, the Marketing Director here at Avantiico. And today's session is all about helping you take control of freight costs. We'll walk you through how automating freight reconciliation inside D365 Finance and Supply Chain can help you catch hidden overages and bill discrepancies, eliminate manual reconciliation bottlenecks, recover lost revenue, and bill back carriers or clients with confidence, and of course, gain real-time insights into freight cost visibility. We've got a great session ahead, including a demo, some insightful examples, and time for Q&A with our featured speaker, Senior D365 Supply Chain Expert, Steve Stallings. Before we dive in, I'd love to just take a quick moment to share with you some of the other upcoming webinars we have. So first, on June 18th, aka tomorrow, 10 a.m. Pacific, join us for Dynamics 365 Finance and Supply Chain Licensing and Security Enforcement. Learn what's changing before the November 1st enforcement deadline, how to stay compliant, reduce risks, and avoid costly disruptions. Then on June 24th, again at 10 a.m. Pacific, join us for streamlining year-end financial close and consolidations in D365 Finance. Discover how our embedded AMCS solution simplifies intercompany eliminations and multi-entity closes for organizations with complex financial structures. And then finally, coming up on July 10th, get ready for Unlocking Smarter Budget Planning with D365 Finance, a deep dive into how to optimize your financial planning process inside D365 with the out-of-the-box budgeting module to drive smarter decisions across your business. We'll have even more events added soon, including an August webinar diving into Microsoft Fabric, its newest AI-powered capabilities, including Copilot integration. More details to come on that session soon. Of course, all the registration links for these events, along with access to our full on-demand webinar library, will be shared in the chat and, of course, available on avantiico.com. Now, just one last quick note as we go through the presentation, don't hesitate to drop any questions you have directly in the chat. We'll answer them as we can throughout the session or at the open Q&A at the tail end. And with that, Steve, want to take it away?
Thank you. Thank you, Aaron, for that nice introduction. Some of you may have noticed on slide 1, it said that we were talking about the 3PL cloud automation freight reconciliation. Well, that's a true statement. That's basically a nod to the origin of this module. We know that most of you on this call are not 3PL providers, but you're distributors or manufacturers with a high volume warehouse activity that justifies looking at freight reconciliation. So when you look at our 3PL automation cloud solution, the first version of our freight reconciliation was a component of that 3PL solution. Today, we're going to be talking about, well, if the clicker will work here, there we go, freight reconciliation as a standalone module. With our release 5 version of freight reconciliation, we've now separated it from the 3PL solution. So 3PL clients can still benefit from freight reconciliation, and non-3PL clients, those who are just manufacturers and distributors, can also get the benefit of this solution. The reason we started this back when we were focusing on the 3PL clients or providers is that freight costs are one of the highest costs they incur of all the value-added services that they provide to their customers, and it can be in the millions of dollars a month. Industry standards say, and it depends on who you read, it's either 15 to 20% or 20 to 30% of freight charges coming from carriers are not necessarily accurate. So with that kind of a discrepancy, being able to reconcile freight quickly and dispute charges that are not legit makes a lot of sense. The problem is freight reconciliation is not easy. It takes a great deal of time because you've got freight bills that you've generated for your outbound shipments. And those have a tracking number and a carrier and a lot of other information on them, service level, dates, et cetera, et cetera. But when you get the carrier invoices back from 3 to 5 days later to a couple of weeks later, they don't match your carrier invoice, or your carrier, the carrier invoice doesn't match your freight bills and can have up to 4,000 or 5,000 lines on a single carrier invoice. Manually matching that is an arduous task. So as a result, we've introduced automated freight reconciliation. We also didn't like the freight reconciliation that's standard in the Dynamics Transportation Management module because there were too many manual steps. So what we've done is we've introduced a solution that does not require the Dynamics Transportation Management module at all. It's completely independent of that. And it pulls data directly from your warehouses as far as shipments, tracking numbers, freight estimates, and all the information we need to do matching. So that white rectangle on the bottom indicates data that's coming in from the warehouse. And that data typically comes from Dynamics Advanced Warehouse Management Solution, but it can also come from other warehouse systems if you happen to be using a third-party warehouse system like Manhattan or Corber or one of the many others out there. So we essentially pull in the freight data as freight bills from the estimated freight amounts that you've provided your clients at shipping. Later, days later, weeks later, we get a carrier invoice in that may have thousands of lines on it. And those carrier invoices have many cost components. They might include the basic freight, accessorial fees like fuel surcharges, toll road surcharges, multiple delivery attempt charges, all kinds of additional charges, which may or may not match to your original freight bill. So the idea here, moving across the page to the middle, is that on a one-time basis at least, and possibly periodically adjusting it over time, you're going to set up matching rules. And those matching rules are going to determine what we're trying to match between the freight bill and the carrier invoice. And that supports the automatic matching process. So once automatic matching takes place, we've got two outcomes. The match history details those things that matched, that can automatically be paid to the carrier because we matched within tolerances. And I'll explain tolerances as we go into the live demo. And we also have exceptions, things that did not match. And those things that did not match have to be reviewed to determine what we're going to do with them. Are we going to bill them back to our customers if we have that option? Are we going to expense them and eat that cost ourselves? Or are we going to dispute that cost back to the carrier because it's not a legitimate cost? So what we're finding in this process is we're reducing the manual effort by about 98 to 99% over manual freight reconciliation, or even the freight reconciliation in Dynamics TMS. As a result, we've got time to do the exception analysis, and the output of that is that we can go back and review the rates that we're charging on our initial tracking number estimates, and either propose additional customer charges that we should add to those rates, or change the rate tables if we're using rate tables, or even change the markup that we're adding to those things so that we can cover the common discrepancies. So this gives us a tool to not only identify the exceptions and deal with those, but also to improve our freight rate management going forward. So that's the process we're going to take you through today. And of course, if there are any questions, I will either answer them directly, or I've got an expert standing by, Johan Hedge, who's one of our implementers, who can also help you out. This is a screenshot of the workspace for our freight reconciliation module. It's like any other module within Dynamics. It has a workspace, it has some menus, it has forms that look just like Dynamics forms. It's written in Dynamics language and sits on the same database. So it's a fully embedded module. It's not interfaced or external in any way. What you see here at the top in the blue tiles is essentially what the process is as we go across. And I'm going to go through it in live slides. But essentially, we've got unreconciled freight bills that we've processed on our shipments. We've got unmatched freight bills that are pending being matched when the matching process starts. And by the way, these numbers of 300,000 don't make any sense. This is test data. It would probably be in the low thousands, but not the hundreds of thousands. And then the carrier invoices, this data does look good. We've got about 225 unmatched carrier invoices that are made up of 504,000 lines. That's pretty typical. And the problem is matching those 504,000 lines on invoices back to our unreconciled freight bills is the bulk of the problem here. And then we've got the freight bill cost components also. That is all of the detail data that those carriers are providing us about what each cost type is. And then, of course, at the bottom of the page, we've got some lists we can view: unreconciled freight bills, unmatched freight bills, etc. What I'm going to take you through today in the live demo is a review of the carrier invoices and the way we look at that data as it comes in. And by the way, we bring carrier invoices in their native EDI form. We don't require a value-added network provider to support that EDI. We do all the mapping internally in this module. So when we import carrier invoices down here, we're importing the EDI X12 formats, and we're translating those to data that D365 can ingest automatically for you. We'll look at then the invoice lines on the carrier invoices. We'll take a look at the freight bills that we're matching to those invoice lines. And then we'll look at some of the matching history and unmatched lines as well. We'll also look at those carrier cost components that I mentioned earlier, and we'll look at the matching rules. So that'll be our live demo today. And I want to make sure that we're covering a couple of different things on this form as well. If you notice, there's very little that a user has to do here. Most of this form is periodic processing and imports that are done automatically by the system. We've truly automated this from initial ingestion of the freight bills and the carrier invoices all the way through the matching and the outputs. The only manual effort you have here is some inquiries and reports that you may want to run, and updating your matching rules over time if you need to do that. Everything else literally is automatic. So there's some setup, of course, involved in the initial setup, but that's only a matter of a few weeks. So we'll spend some time going through some of these things that are used for analysis, and then we'll come back and finish up this PowerPoint. So at this point, I'm going to go into a live demo. So let me escape from this and bring up my demo system. Good, it has not expired. So we started here on the workspace. I'm going to take you to the menus here. And as I mentioned, these are the menu options that you saw just a moment ago in the PowerPoint slide. Now we're in the live system. So I'll go out to carrier invoices, and I'm going to select a particular carrier invoice that I know has good data in it. And we'll take a look at this one. So this is a DHL invoice, came in via X12. It's from DHL Commerce. That's our shipping carrier. That's their shipper account, the invoice date, vendor number, because we're also going to have to pay them. So we set these carriers up as vendors as well. And there's some other additional information here about the this particular invoice. When I drill into it to get down to the invoice lines, we're going to see that some of these lines are matched, some are not matched, and others may be matched with variances or matched with warnings. So we'll take a look at these different types as we go through and review what types of information we're getting from this. So let's grab this one here, this match line. What we see here is the tracking number from the original shipment, the freight bill, if you will, the invoice date, the ship date. So it was only 3 days after we shipped it that we got invoiced. The amount that we thought we were going to pay, the $7.72, and some more details. This is detailed information about the shipment that we can use in matching. We don't have to, but we can. We can have matching rules that match the customer PO number, the customer identification and other things, billing reference numbers, etc., in the matching process. But essentially, this is the data we're matching. Down here, we have the cost components that came through on this invoice line. So there was a freight line of $7.58 and a label fee of 14 cents. That totals what, 772? But we thought this was going to be, oh, I'm sorry, that is the amount, 772 up here. But we thought this was going to be 620. So the freight bill identified this as 620. The carrier came in at 772. So we've got a $1.52 variance. Notice that it's green, though. It's still listed as a match because that variance is within tolerance for the way we set up the matching rules. If it had been outside of tolerance, we'd see a different outcome here. So essentially, we've got a matched invoice. We can, and at the time that we generated the freight bill, we also generated a financial accrual. So the finance organization is aware of the process that we're going through here, and all these unmatched freight bills that have to be processed. So they know the financial impact of eventually having to pay these freight bills back to the carriers. Once we do the matching here and process the outbound AP invoice to pay the carrier, we reverse out that accrual. And the combination of the accrual and the reversal makes it really easy for finance to track their liabilities here during this process. So we're not only helping the people that do freight reconciliation, we're helping your finance organization as well. Okay, so we've got an example of a matched one. Let's take a look then at line 1 up here, which was a not matched. Okay, we've got a $30 amount here in charges. We've got no matching history, no information here about how that came to be. And what we see here is this is an accessorial fee, but no tracking number was given with it. So we can't match that to anything without a tracking number. Tracking number is, by the way, the number one thing you want to match. After that, it's probably carrier, and then service level, cost, dates, et cetera, et cetera. Excuse me. But without a tracking number, we can't match this. So someone's going to have to manually go in and identify whether this is a legitimate line and either find the tracking number and enter it here, or decide that this is not a legitimate charge and dispute it back to the carrier because we don't have enough information to know what to do with this accessorial fee of $30. Let me take another example and scroll down here to one of these that we saw that was matched with warning. Here we go. Oh, no, this is a not matched. That's different. Here's matched with warning. Okay. This matched with warning indicates that the amount is 571. And here we've got the 566 plus 5 cents is the 571. But what we expected was 0 on this one. So the entire amount is a variance, and that exceeds our variance tolerance. So therefore, this is a match with warning. In other words, the tracking number matched, the provider, UPS or FedEx or whoever matched, the dates matched, the service level matched, but the amount is out of bounds. And this allows us to go in and manually review these as well and determine what we want to do with these. Again, dispute them back to the client. If you're able to, you may charge it to your customer if your contracts allow that. Or to eat it and expense it and pay for it. So that's the process we're looking at here with these. You'll notice also that there are freight bills listed here. And I mentioned we're going to take a look at freight bills next, so I'll just grab this one as an example. And what you see on a freight bill is all the information we collected from the warehouse about the shipment. We've got the freight bill ID, the date, the tracking number, the billable account, which would be, this is going to be the customer that we shipped on behalf of, the method of shipping, DHL Commerce, et cetera, the warehouse we shipped out of, all the different charges on this that equal the total charges that we're going to charge. And then we've got some unmatched charges here as well, because so far this one hasn't been fully matched. But again, all the detail you need about the freight bill is here, as well as other information that we can use in matching that's not required, especially if it's an LTL shipment. There's some other data like a pro number or other data that we would have instead of the parcel information. Cost components, if we know them, this would be the accessorial fees like fuel surcharges, labeling charges, last mile delivery charges, et cetera, et cetera. Our accruals and reversals, if they've occurred yet. And then finally, the details where this one has matched. And this is that $5.71 variance that we saw before. So the original freight bill was $22.51, and we had a positive variance, it's listed as negative, a favorable variance of $16 on the initial one. And then we had this $5.71 come through, which was completely unmatched. So we still have some value here available that we can match that against. So we might want to go ahead and process this one that way. Just simply charge one against the other. Okay. So the
Steve, Johan here, one additional comment on this particular line. The carriers may give you multiple invoices for
that's
the
a good point. Thank you.
same freight bill. So yeah, go ahead.
Yeah, let me introduce Johan. Johan Hage is one of our implementation experts on this module. He's also been working on the development and testing for it. So he will answer all the complicated questions, but that's a really key point that he brought up. The carrier invoices don't happen just once. Carriers can invoice you multiple times over 30, 60, 90 days, depending on what their terms are. And so you can get an invoice on day one that says we're charging you, 2250, which is a $16 variance. And then 3 days later, a week later, you can get a second invoice against that same shipment where you have $0 left on the freight bill. They've already been consumed and varianced here, and we're now charging 100% variance on that one. So over time, that's one of the difficulties in doing manual matching, is you may be able to match the first carrier invoice to the freight bill, and then there's a second carrier invoice that comes in right behind it. We automatically match these over and over and over as the carrier invoices come in, so we know the final effect of the variance here. This variance is over $22 in total, if you look at the fact that it was, oh no, I'm sorry. The freight bill was $22. So the first bill came in at 571, brought it down to 16. Second bill came in and we'll bring it down further. So we can manually take care of that kind of a discrepancy. Okay. One of the other things I want to do is take you back to a not matched line. Sorry, let's just go back here. One of these that's not matched. And when we're doing our manual reconciliation, the person doing the review has the option, if your clients allow it, if your customers allow you to send them freight adjustments, to generate a bill direct, which is an additional freight bill to your customer that says, by the way, the freight estimate that we gave you of 571 has been exceeded by the carrier, and you now owe us an additional X dollars. So that's very true in the 3PL industry, not necessarily true in other distribution industries. So you may or may not be able to use this bill direct option. You may have to eat these costs and then adjust your freight estimates so they don't happen again. You also have the option to rematch or to expense them. So if you know this is going to be a match or a mismatch that you're going to have to eat, you can expense it. This unmatched or not matched line goes away and is ready to be paid as an invoice line to the carrier. So this is just something we're going to have to eat, so we've expensed this dollar amount. So you can disposition these that are not matched as well. And I'll have more on that later in this presentation on the dispositioning process.
Steve,
Okay,
there's a quick question maybe to touch on in terms of the variance tolerances. Are they set as like a plus minus dollar value, or can they be set as like a plus minus percentage? What is the settings?
Excellent question. The answer is both, and that's the next screen I was going to take you guys to.
All right.
So perfect timing. All right, let's go back here to our matching rules, freight bill matching rules. So when you set up the matching rules, you determine which matching rules you're going to use, and you can nest these. So let's take a look at full match first. Full match says that we've looked at the carrier code and it matches. It's a DHL shipment or a invoice and shipment. We've looked at the tracking number and it matches. And by the way, no tolerance on those. We've looked at the freight bill date versus the billing date, and those match. That's 100% match. And then the total charges, either by an amount or a percent. In this case, if we go over here, we've got $20 is an allowable tolerance. By the way, that's not realistic. This is test data. Your mileage may vary. $20 is an acceptable.
It's quite realistic, this because it says $20. You get a warning when it gives over $20 difference, or you get a warning when it is over 200% difference.
Right, and here's the percentage.
And if you get into your values, then you will see that it's a quite normal number.
Okay, fair enough. Johan's the expert. The reason I thought these were too high is that if I'm giving people a freight estimate that is my freight cost plus a 20% markup, I would want to know anytime this is over 20%, but it may be more realistic to set this as 200%, indicating that when the percentage is double what we expected, then we want to set this up as a mismatch. So
Yeah, you
these
will
are
see it.
quite
You
generous
will see
tolerances.
it, Steve. You will see it in the amounts. If you have like LTL shipment with high amounts, then you want to know more than $20. But if
Right.
it is like the smaller amounts, then they come easier across the percentages.
Okay, fair enough. That's why we have the expert standing by. Thank you. So essentially, we've got a full match here. We can also have other matching rules here, and we can have nested rules so that if the carrier code and the tracking number match, then we move on to the bill date or other types of matches, and we can have as many matching rules as we want in each of these processes. And the system will automatically match our shipments against these and identify which one provided a match. These reference number matches, by the way, are matching against additional fields that we've identified as reference on the shipment. And when we get back to shipments here in a couple of minutes, I'll point those out. Those could be like it says here, a carrier code. It could also be a customer PO number, a customer ID, or any other information that we have in the reference fields. And all of that depends on what we map to Dynamics 365 when we import those freight bills.
One more addition, Steve, here. What happens often is when there is, for instance, return shipments, the carrier gives you a different tracking number because the goods are picked up, and then they put in one of the reference fields, and which one you don't know. Could be reference 1, 2, 3, could be any of the fields that the carrier puts in their X12 messages, and then you have the flexibility to match the tracking number on the freight bill with any of the fields from the invoice.
Okay, so even though the tracking number is a new one for their return, the original tracking number will be in one of the reference fields most likely. Great, okay, so these are the matching rules that we've identified, and we've identified which ones are used for different types of activities here. I don't have all of this is demo data, so I don't have all of them set up. But this is what's used to automatically reconcile those freight bills. So moving back to our menu here, if we take a look at a freight bill matching history then, okay, this is where all that data ends up residing after we've done all the matching. So we've got the date, the freight bill number, the tracking number, the consumer's PO number, if we happen to have that, that would be the customer's PO number, the billable account, which is the customer. We've got the freight bill amounts, if there are any, the variance amounts, the carrier invoice amounts, and all of the details here for carrier invoice line. This list of data would be an excellent pivot table to export to Excel, which, as you know, in Dynamics is always available. We can always open it in Microsoft Office and export it to Excel. And I just kicked off the process instead of showing it to you. I apologize. We're about to open Excel. Then this could be used in a pivot table format to analyze the data and determine where your greatest discrepancies are and what types of charges are causing those discrepancies. This form has a lot of data on it. Let me go to the other one back over here because I didn't intend to click on that. Okay. That's why I have a backup session here. There's a great deal of information here about the invoices and the shipments, including what type of match was done here. If I scroll down here, you can see some of these are full matches, some are tracking detail match, others have been expensed or billed directly to a customer. So all of these different outcomes are identified. So this information could be very valuable for analyzing your freight discrepancies and determining where you want to change your freight rates so that you reduce or eliminate these discrepancies at the front end and not have to worry about reconciliation problems at the back end. So a great deal of information here that you can use. We're also going to be using this data to develop Power BI and analytics reports, which you could do yourselves as well to analyze this information in Power BI. Okay. Oh, one other record that I wanted to point out here, if we go back, I'm not going to go to it, but we also have unmatched carrier invoices. These are the ones that have been processed and did not match. Unfortunately, in my demo data here, I've got 350,000 lines, so I'm not going to open that one. but that's because we do so much testing out here, we end up with a lot of junk. But this is another form very similar to the matching history that we just looked at for those that did not match. Okay, and then over here in setup, if we go to cost components, there we are, my cost components. The other thing I mentioned to you is that carriers send us details about the fees that they're charging us. And different carriers, DHL or UPS or FedEx or whatever, have their own list of charges that they're going to list. And these codes differ by carrier. So this is a carrier cost code. We've translated it to their initial cost codes are all over the map. But once we translate these, then we know what they're charging us for: a freight fee, a label fee, surcharge, fuel surcharge, goods, service tax, et cetera, et cetera. On import or export, it could be duties as well. So all of these charges that are being identified are being carried on the carrier invoice side and submitted to us at the carrier invoice lines. One of the things that we intend to do in release 6, we're currently in release 5 here, is we want to take these discrepancies, these carrier codes, match them to the discrepancies, and use an AI copilot, an agent, to match at a much more detailed level and go in and match by carrier cost codes, so that we can get a much more closer to realistic view, and we can identify where our discrepancies are at a much more granular level. This will also reduce the amount of work by a manual person to go in and review discrepancies, because the AI agent will be able to cover more of those discrepancies by itself based on our processing rules. Okay. Let's go back to the PowerPoint slide for a minute. Back to presentation mode here and move down. So the process I've just shown you is really in 3 different parts. Up front, we're getting a freight estimate from our warehouse. We're assigning a freight bill value to that so that we can process it as a reconciliation process. And we're accruing the cost so finance has full visibility that we are we're at risk for these amounts that have to be paid to carriers. At some later point, step 4 occurs. It can be 3 days, 5 days, couple weeks, and it can be multiple times. We're going to receive carrier invoices that hopefully will match to those freight bills. The process of matching is in step 5 here. Excuse me, got a bit of a cold. So we're doing the automatic matching process, and then we're automatically generating the AP invoice, the invoice journal, the expense, and the bill direct when we have a match. So if your customers allow you to bill them directly for discrepancies, we can automate that. Many will not. We can automate the expense for the mismatches that fall within our process limits, and we can automate the AP invoice to pay the carriers. Once we generate this AP invoice journal, we reverse out the accruals, so finance is up to date now. Instead of having duplicate entries, they've got the AP invoice journal now representing the liability instead of the accrual. So that's the process in a nutshell. And the only thing that isn't automated here is the reconciliation at step 6 when you have discrepancies that are outside the norm. So the advantage of our solution, it's really a key part of your AP and AR automation process. We're fully automating as much as we can here, with the exception of things that a person would want to review. That reduces human interaction in the matching process to about 1 to 2% of what it used to be when it was manual. It means fewer errors, which further reduces human hours required. It allows employees to focus on other freight-related activities or the significant errors here that have to be corrected. And as I said, the industry average, depending on whether you're looking at Forrester or Gartner or others, some say 20 to 30%, others say 15 to 20%. I took the lower number, but if we're getting 15 to 20% errors in our invoices, then we want to identify the bulk of those quickly and resolve them and dispute them rather than pay them. So that's the process we want to identify here, is how to identify those discrepancies so we can dispute them with the carrier and not have to pay them. One of our clients, which is a 3PL client, so they generate a lot of parcel shipments, they spend about $3 million a month in parcel freight alone. and they're now saving $400,000 a month in freight charges by a combination of disputing, first of all, being able to pay on time and avoiding interest charges and other things, but being able to dispute the charges that are not legitimate, and in their case, because they're a 3PL, also direct bill their clients for charges that are legitimate that exceed the estimate. Some of you will want to change your contract terms with your customers to be able to do that. Many of you won't be able to do that. So that 400,000 savings may only be 200,000 for a company that's not a 3PL. And then pay legitimate carrier invoices on time, avoid late fees, and be able to dispute the erroneous charges. And finally, the auto accruals and reversals provide the finance organization with visibility throughout the process so they know what their liabilities are, and really simplify month-end close processes because we've already done the accrual for them for the month-end close. They don't have to go through all those invoices and accrue those costs for the ones that are remaining open over the period. So that's the real advantages for our current version 5 solution that we've been covering. And as I mentioned briefly before, in version 6, which should come out at the end of the year, February at the latest, we are creating a D365 Copilot AI agent that will review and compare the freight bill to carrier invoice discrepancies, or we should say variances here, and resolve automatically all the routine discrepancies that can be direct billed, expensed, or disputed that are within the processing rules that we set up for that AI agent. So that really further reduces human intervention to really near zero. The only thing a human would have to look at is any discrepancy that falls outside the normal processing rules. And we hope to have that by end of year or early next year as part of this solution. Thank you for your attention, and let me open it up to questions now.
Awesome. Great job, Steve. A couple of questions did come through. We partially addressed some of them from Toby over at Fountain Tire. There was one about do we perform duplicate checks to ensure duplicate invoices are not submitted, and we addressed that. But then the second part was, can you self-serve and maintain rate table changes directly? And then after, I think Toby, I think Johan, you wanted maybe a little bit more detail from Toby to be able to address that.
Yeah, that
question.
one I'll let Johan answer. The first one is, yes, we do identify duplicates. So during the invoicing process, you may get not additional costs from the carrier invoice, but a duplicate line on a carrier invoice. And we do identify those. So that is something we catch during the reconciliation process. But many times the additional carrier line isn't a duplicate. It's an added fee, like I don't know, maybe it's a toll road fee that they didn't know about when they first invoiced you, but their driver reported it later. So in a lot of cases, that duplicate invoice isn't a duplicate, it's an added charge, but we do catch dupes that are actually duplicate invoices.
Let me get also, because I looked at the question a little bit different.
Okay.
If I interpret the question as duplicate invoices, yes, if you have imported like a FedEx invoice number 1234, and you are importing this 1234 again, then the system will put it in an error queue,
Right.
which you observe every day. And then you could say, okay, this is the duplicate one. I will remove this one. Or, and that is exceptional. I haven't heard that from carriers. If they are telling you, like, remove this invoice, we send you a new one. That's very uncommon. But yeah, technically there is both for all the carriers an option to remove duplicates, or actually to a message to put in the error queue duplicates. There is also an option, because sometimes, for instance, UPS is sending you combined invoices for multiple account IDs, and then we have the option to say, okay, if this account ID is included in the invoice, then we avoid importing. We accept it, but we do not import it. That's an hopefully the answer to the question.
That's a new one that I didn't know about, Johan. Can you
That is
explain that
correct.
a little more detail?
Yeah, there could be like 5 account IDs being used by UPS to send in one invoice, and then one of the account IDs is not for this particular legal entity, and then you don't want to import that information because that would give some noise in your invoicing because your legal entity does need to to process that one. And then this is an option.
So
And
we
what
would set that aside. Would we notify UPS that they need to separate those out and re-invoice us?
they're not going to do that. The carriers are very powerful. They're not going to do that. Yeah, you
so
have
we
an
would have to
agreement with
separate it out.
UPS. Yes, that's why we separate it out. But you're right on your part. If there are in multiple invoices the same tracking numbers appearing, then these are matched against. So the first line is basically matched against the freight bill, and then the next consecutive tracking invoice lines are added as an addition. That's why you saw in one of your messages that there was actually a cost of 0 and the full cost, the full carrier invoice cost was added as cost.
As variance, yeah.
Yeah, it's variance.
Yeah. Thank you, Johan.
And
does
then
that
back
answer
to
your
the
question?
second question.
Oh, go ahead, continue.
You got a
Okay,
thumbs
rate
up.
question. Yeah, the rate question. Go ahead.
The rate question. I did interpret the question as if the carrier is changing the rates that they agreed with you before, then you would have the possibility to do that by matching per cost component, per freight component. Assume that you have agreed with the carrier that the rate for like the small parcel is $7.75, and suddenly they are increasing the rate to $7.80. Then you will see that you will have the possibility to split your total freight into the different variances. And if your system allows to send the estimate per cost component, then you will be able to do the cost component match with the carrier. The carrier provides it kind of normally. FedEx is very, very outspoken. They have like, I think 87, 80 or even close to 90 freight components that they can charge. UPS is also very outspoken in the ways they charge. DHL is very common. They have most of the time 3, 4, 5 types of cost that they charge. Does that answer the question, or?
I think part of the question may be, do we then have to take these discrepancies that we've analyzed and identified and update the rates we're charging our customers? So if we're using rate tables, absolutely we would do that. If we're using negotiated rates with our carriers, then we may want to not change the rate itself, but change the markup that we put on that rate. And let me explain that. Most large companies get favorable rates as much as 30% off from the carriers over published public rates. So if you're shipping to your customers, you can use your contract rate plus a markup and still beat the public rate. So you may have to play with your markup amount or your markup percentage in order to cover those discrepancies if the rates go up and you're not maintaining the rate tables yourself. So you can't go in and change your freight rate tables.
But we have the option to maintain them directly should we want to.
Yes.
Okay, thank you. That's what I needed to know.
I think there's a couple more questions also, right? Like if you have multiple warehouse shipments throughout the day going to the same customer, can you consolidate the outbound shipment into one master shipment and therefore one invoice at the lower C2W rate?
Yes, well, that really depends on your warehousing setup, your consolidation of shipments. Once you've generated the freight bill for either a single shipment or the consolidated shipments, you have a freight bill, regardless of whether it's one or many. But in your warehouse, you can set up your priorities so that goods going to the same customer on the same day can be consolidated into a single shipment for a single freight bill. Once we generate the freight bill, then that's what we got. So if you shipped them individually, then we're stuck with individual freight bills. But if you consolidate them in the warehouse and ship them under a single freight bill, then we can certainly do that.
And also for carriers that do not facilitate EDI, is there, what other import functions?
Yeah, that's a good point. Most common carriers, if you're doing LTL shipments, do not support EDI. Very few of them. JB Hunt may be one of the only ones that does. They are much less sophisticated in their communications. They'll send you the same data, but it may be in a flat file, it may be in a comma delimited file, or even in Excel, and we have the ability to parse that data and turn it into our required input form. So yes, we can handle it. It's not as clean as getting an EDI feed directly from the parcel carriers, which tend to be much more sophisticated in the way they process data.
We
But
provide
yes, we can import it.
we provide an CSV template. So if this template is being filled in, we can always import that for any carrier.
Yep, it's a good point, because not everybody ships by parcel.
And the same format can actually also be used for LTL imports. Number of these fields is limited. It's not as much as we have in our X12 imports, but definitely we can have this Excel template or the CSV template being used for any carrier.
Yeah, and it really depends on what data they're sending us. The LTLs don't send as much data, typically.
Awesome. I think,
Well,
go ahead, Steve.
I was going to say, we'll keep this open for more questions, but thank you. These are all really good questions we're getting so far.
Yeah, 100%. I mean, we have addressed everything I think that has come through in the Q&A. If anybody, oh wait, I guess no, another one just popped through. So once you settle the freight invoice, does it make a payment journal for accounting to pay vendor from?
Yes, it creates the AP invoice journal automatically. And we could actually take that all the way through sending that invoice out to the vendor automatically. But many companies want to have a point in that process where they review invoices before they generate the payments. So you can stop that automated process at any point and have a workflow that allows you to review and approve, or you can fully automate it all the way through sending invoices out. I don't know any of our clients that are that confident yet that they're doing send without review, but it is possible.
Our biggest client is currently automatically importing the carrier invoice as an AP invoice journal. That journal is automatically approved, and within the payment terms, they pay the amount because they know that with sending the remit advice, they have always the possibility to dispute and not pay any interest or late fees or those kind of things. So it's very, very easy for them and saves a lot of effort to just to be compliant with the demanding carriers.
Yeah, that is a good point, because the carriers, they have the power. You don't. If you're late in payment, they can quit showing up at your door to pick up your goods. So you have to pay them on time if you're going to have the option to dispute things with them and negotiate with them on discrepancies.
Awesome. Any other questions? I mean, feel free to keep popping in the chat, but also you can take yourself off mute and address Steve or Johan directly. Okay, there's one here that just came through again. So does the system have the ability to produce a WIP report, a WIP report at the end of the month?
WIP report. We do have the report of unreconciled freight bills and unreconciled carrier invoices, and those could be generated at a end of month point.
Do I interpret WIP as not yet paid, invoiced, not yet received invoices for the freight bills?
He answered it perfectly.
Okay.
Thank you.
Okay.
Yeah.
Thank you.
So it could be both freight bill and invoice, but we do have the ability to generate that information. And by the way, we also recommend that, as I showed you the matching results, you probably want to make sure that information gets into a data warehouse so that you have the ability to analyze it over time as well.
How long does it take?
We can help you.
Oh, sorry.
Go ahead.
Go ahead. Sorry.
So if somebody was interested in taking next steps to utilize this, how long does setup typically take I mean, assuming that you had a carrier pool of about, I don't know, 40 carriers.
Johan, I'm going to defer that to you since you've actually worked on implementations and I'm in the sales side, so you don't want an answer from me.
It's like the setup in itself is pretty straightforward. It takes a couple of days to investigate what typical things are in your area and what we do need to set up. And also what is important is how is the data provided from the carriers. But like if I mentioned, I know, for instance, for DHL, if you ask them for the current invoice to send you an X12 invoice, you get it overnight. FedEx is a little bit more complicated. UPS takes also a little bit more time. But this setup is pretty straightforward. If you're talking about like CSV templates for the carriers, then it might be a little bit more complicated because we need to have this data in the template format to be able to import. But once the template is there, it's easy go.
So from the standpoint of setup, the parameters, the matching rules, the carriers, the import formats, would you say that that's about how many weeks process is that before they could process their first automatic matching?
If you just take an example, I've been doing like in a week time, you do an example with provided carrier data from and freight information from DHL.
Okay,
Oh,
so in a month or 6 weeks, we could do a complete implementation across 40 carriers.
Something like that, yeah.
Okay,
so just,
great. I just want to make sure that that answer comes from you because I was going to say a month, but I don't want to, give the sales answer if it's more complicated than that. So,
I have another question.
Yes.
I'm sorry. It's a good thing you guys invited me. Hold on, I just lost it just a second here. So somebody else has a question. Go ahead.
Yeah, there's one in chat that if you guys want to address what you think, is this for sales order shipments only or transfer orders are also included?
Anything that is sent by a carrier can be provided.
Yep. Anything that you're shipping. So transfer orders, returns, normal shipments, basically anything that you're getting a freight bill for.
Consignment shipments, whatever you want. Yep.
What about inbound shipments?
I'm sorry, I didn't quite catch that.
Yeah,
inbound shipments.
Inbound shipments. So be using it from, I guess, the item arrival section is the only place where I can think the system would record the carrier. But to match up an incoming shipment and then a freight charge or any kind of charges from like MSC
Are you
or
paying
something.
the freight on the inbound shipments or is your vendor paying the freight on the inbound shipment?
This would be for the few vendors we have where we are responsible.
Okay, so
not many. There aren't many to your point.
Is the carrier using your freight account when they ship to you so that you have control of price, or are they using their freight account?
Both scenarios apply.
Okay, I'm pretty sure that if they're using your freight account, you'd have enough data, but if they're using their freight account, I'll leave that to Johan. I'm not sure there's enough data there.
If you receive the invoice, then you can also provide in the freight bill import section, you can also provide the incoming inbound shipments information. It's just an identifier and it's like we have recorded in our freight bill import section, which is normally coming via an API. But here again, you could use a standardized CSV format, which is available for import. And it doesn't matter to us if it's a customer number or a vendor number that is coming in.
Perfect. Thank you.
Great questions.
So
I'm glad I had Johan on the call.
One more just came in through the Q&A. The system will compare rates, but can it automatically code to a GL account using preset rules?
Yes, I did not mention the mapping to GL accounts. We use both the tags, which are new dimensions that Microsoft's added that are for reporting, not necessarily for financial posting. We use dimensions and we can set preset accounts for the accruals, for the reversals and for the AP invoice process, AP invoice journals. So those can all be predetermined in the setup so that they hit the right accounts automatically every time.
Thanks, Steve.
So if I heard you correctly, are you saying that on the customer card, we could say if the transactions between this warehouse and this customer, we want it to go to this GL account automatically. If we set it there, then when we settled the invoice, it would automatically classify correctly?
Sure. Yeah, because we can use accounts and dimensions. So warehouse could be a dimension.
Thank you.
All righty, keeping an eye on it. It looks like you guys have addressed everything that has come through. Give it another moment. If there's anything else, again, you guys can pop off chat or pop off mute and address Steve and Johan directly. But I think some great questions and a great discussion. Oh, one more just popped in. So in case imports, if we're using landed cost module, then can we still use reconciliation?
Okay, the landed cost module is going to track things like duties and taxes and freight automatically within that module based on the estimates that you've created. So if you've got a tracking number for that landed cost shipment, or the individual PO line within the container in the shipment, then yes, we would be able to track that as well. Now the landed cost module itself is a tool for evaluating what your costs are and identifying variances and going back and updating your estimates within that module. But we could certainly reconcile those discrepancies from that data.
If you provide the same information in the freight estimate, then we will have the cost components split on the freight bill side and can match that with the cost components on the invoice side.
Yep.
That's a really good question. It all comes back to two import streams, like it's the freight estimate that we get from one side, it's the invoice information from the other side. The matching combines all that, it consolidates it in this matching history, and the only thing what is left is the exception processing. So are there any duplicate invoices coming in? Is there any issue with the data? For instance, sometimes we receive wrong data in the file itself, then that should be handled on a kind of daily basis. But the matching itself is 90+%, and it's very time reducing for the team that handles the freight.
Let me add one other comment to that. Since I've actually worked with the landed cost module extensively for the last 9 years, even before Microsoft owned it, when Sable owned it, I worked for Sable back then. The landed cost module is an excellent tool for imports, but it completely ignores exports. What you have with this tool, with our freight reconciliation, is the ability to capture those costs that your carriers have sent you about exports for duties, taxes, and other fees as well. So we are capturing that cost and allowing you to reconcile those costs on the import and the export side. So that's an advantage over the landed cost module, which does a great job on imports, but completely ignores exports.
Well, thank you.
If there are no more questions, I want to thank you guys for an excellent feedback session. Lots of additional information in this Q&A session that we didn't cover in the webinar, and invite you to dig deeper and ask us more about this module if it looks like it would be of value to you.
Just now there was one more question coming through, Steve, for you.
No
can this tool accept all pricing rate structures? Pricing and rate structures.
I'm going to defer that one to Johan. I don't know the answer to that.
The pricing rate structures, that is basically what we do have in the 3PL automation cloud, where we have like discounted rates, published rates, rate cards. All these variants are available and possible, and we can in the freight recon only mode, we are able to record all these, and then you can use that in the analysis. So in your matching history, you're able to analyze that data and report from there and bring it back to your system of record.
So those tables reside in our 3PL module, but they're available to you to use in the analysis for this module.
Yeah.
Right. Cool. Well, I think we are hitting time, but yeah, like Steve said, some great questions, great discussion had. Thank you everyone for joining. We'll be cleaning up this recording and sending it out to you, and we'll follow up. Don't hesitate to reach out directly and to Steve. But we will be following up with the recording, making sure that you have it so you can share it within your organization if you'd like. And yeah, again, thank you for your time, for joining, for the wonderful questions, and I hope you have a great rest of the day.